We're now going to move to our next panel, Scaling Sustainable Platforms. And I am going to introduce you to our moderator, Jennifer Schenker. Jennifer is an award-winning journalist who has been covering the global tech industry for many years. She worked full-time in the past for the Wall Street Journal Europe, Time Magazine, International Herald Tribune, Red Herring, and Business Week. She's currently the founder and editor-in-chief of the Innovator, the publication about digital transformation. Jennifer has written extensively about the platform economy and has previously moderated a couple of panels for platform leaders. So we're delighted to welcome her back today, straight from Davos, where she's been attending every year for the past 21 years. So Jennifer, welcome, and over to you.
Thank you, Laura, for that really lovely introduction, and welcome everyone to the session on sustainable platforms. As Claire mentioned, I've just come back from the World Economic Forum's annual meeting in Davos, and a big focus this year was on what needs to be done to get to net zero. The answer is a lot. Sadly, global carbon emissions rebounded in 2021 to reach their highest annual level ever. Currently, only 9% of extracted materials are reused, and 62% of global greenhouse gases are emitted during extraction, processing, and production of goods. Global use of materials has, in fact, more than tripled in the past 50 years, and it's set to double again by 2050 unless new approaches are adopted. Looking at today's consumption levels, sustaining our current growth trajectory would require the ecological resources of 2.3 planets by 2050, according to the World Business Council for Sustainable Development. This number is significantly higher for mature markets. The US, for example, would need 5 planets to sustain present-day consumption levels. Germany would need 3. The good news is that it's possible to decouple our world's growth from the consumption of the Earth's resources by shifting from a linear take, make, waste economy to a circular reduce, reuse, recycle one. Here to tell us how that's done are Lucie Basch, co-founder and CEO of Too Good To Go, Peter Windischhofer, co-founder and CEO of Refurbed, and Martí Escursell, a managing partner at OnSite Partners, an investor in Refurbed. Lucie, would you kick off this session by giving us a 2-minute overview of Too Good To Go?
Yeah, it was a high pleasure, Jennifer. Thanks a lot for having us and for organizing that important event. I'm really glad to be with you today and talk a little bit about how platform can truly have an impact in the world. We started Too Good To Go now 6 years ago, and with really the ambition of building a global movement for fighting food waste. So we realized that today we throw away 40% of the food we produce, and we just couldn't accept that. We couldn't accept that we throw away so much food when so many people go to bed hungry every night, when that represents 10% of greenhouse gases emission, and when even economically speaking, it makes no sense to throw away $1.3 trillion of food every year. So with that in mind, we were like full of ambition to create a platform that would connect stores, food stores that might have leftovers at the end of the day, to consumers, people like you and me, who can come and collect at the end of the day all the food that would have been thrown away 10 minutes later. So it's really about using an app and using technology to connect the right people at the right time and help them to save food together. So 6 years later, this actually happens across 17 countries, 15 in Europe, but also the US and Canada since 2020. We save more than 300,000 meals every day from the trash. And this actually gathers a community of close to 60 million consumers and 150,000 stores. So this actually proves that we can really use technology to make a difference. And that also, when you reduce food waste, you create value. Therefore, our business model is really aligned with our ecological impact. For every meal we save, we take roughly $1, €1, and that helps us to build a strong revenue as well, because today, since the start, we've saved close to 150 million meals. Therefore, we also generated more than 150 million euros revenue. And for me, that's the important point, is making sure that the businesses we create for tomorrow are businesses that truly align societal interests and really making a positive impact through building a strong business model as well, and showing that it's possible to build a profitable company eventually, while really always aiming for impact, because our KPI, our most important KPI since the start has been and is still today the number of meals we save every day. And that is so important for me. And once we've built that, it's also really give us the opportunity to talk more widely about what food waste is. And today we're not only using the app to have an impact, we also launch many initiatives beyond the app to talk to politics and businesses and schools on how we can reduce food waste in their daily life and really embark the whole society into a mindset change for the long term. So that's too good to go in a nutshell.
That's great, Lucie. Thank you. Very impressive. Let me turn now to you, Peter. Tell us a little bit, for people who maybe aren't familiar with Refurbed, tell us a little bit about what you do.
Sure, happy to. So we founded Refurbed 5 years ago, and we had a very similar dream and idea like Lucie. We looked at consumption as a whole and found, as you mentioned earlier, Jennifer, it's crazy that we have a linear model, right? We produce stuff, then we use it once or twice, maybe for a year or two, and then we throw it away. Or it's, with electronics, it's in our cupboards, right? And every person at home, every household has between 8 and 10 old electronic devices lying around, not being used anymore. And that's crazy, right? That's something that we have to solve. And that's what we wanted to solve 5 years ago. That's why we founded Refurbed. What we did is we built a marketplace that actually connects refurbishers to companies that refurbish, to renew all the electronic devices, and we connect them through our platform to consumers. So we made sure that people can actually buy these products, that they have access to it, that they have access to high quality refurbished equipment. And we built this platform in both ways. So consumers can also sell back their old devices to refurbishers. And for that, we've been very successful so far. We have more than 1 million customers across 6 markets, did a couple of 100 million of turnover last year, and growing very quickly. And by now, actually looking at other product categories as well, right? Because electronics is obviously something that is very bad for our environment. Basically, if you think about it, everything that we buy as a consumer has a negative impact on our planet. So we're now actually venturing out into other product categories like fashion, sports equipment, furniture, and so on, and offer a holistic platform for you as a consumer to buy all sorts of products that you might want to buy. And ultimately, our goal is to make it as easy as possible for a consumer to live sustainable, because unfortunately, we believe consumption will not stop, but we have to make consumption sustainable. And that's the only way we can actually stop climate change.
Absolutely. Thank you so much. Let me turn to you now, Martí. Can you tell us, you're an investor in Refurb, but tell us a little bit about Bonsai Ventures and your fund.
Yes, thanks, Jennifer, for the introduction, and also thanks to Platform Leaders for the invitation. It's a pleasure to be here this afternoon. So yes, I'm managing partner at OnSite Partners. We are a VC that started to invest back in 2001. So we have now 21 years of track record investing in tech startups. This is what we do, right? We are not an ESG focused VC, but rather a tech VC, right? So our investment strategy has been crafted during these more than 20 years, where we have gone through different crises, from Internet 1.0 to Web 3, and different economic cycles, just to mention 2 of the many global factors that we have gone through these times. And basically, our investment strategy has 4 pillars, which is we are a multi-stage investors going from pre-Series A to Series C. We are agnostic in terms of business model and sector, but we are always software driven. Third, we combine primary cash-in deals with pure secondary transactions, which are typically done in between rounds. And geographically, we invest mainly in Europe, but exceptionally, we can invest beyond. So as you see, I have not mentioned ESG, as we can come back later on about this, but I can tell you that the percentage of ESG investment that we have done has been growing, in the last years, clearly, although we don't have this in our investment strategy. We are about to start investing now our next fund, which is a 160 million fund that will be writing initial tickets of between 2 up to 4 to 5 million as initial tickets, and later on we can build up our position in the portfolio companies over 10 million approximately. So back in March 2019, so literally 1 or 2 weeks before the first COVID lockdown, we invested with our previous fund in Refurbed Series A. We invested again last year in its Series B, so we are happy and very, very passionate investor about Peter's team. And yeah, besides Refurbed, we are also investors in companies such as Casavo, which is the leading European iBuyer PropTech, or Sencloud, which is a logistics aggregator serving thousands of e-commerce across Europe, based in the Netherlands, or Exotica, which is a next generation tour operator, which main market is the US, but it's a company based in Spain. And in the past, some of the companies where we have invested and that we exited, just to mention a few, which are B2C and probably well known rather in the southern part of Europe, companies such as Idealista, Softonic, InfoJobs, Globo, and PAC. So this is about OnSite Partners, which I insist I can give you later on some more figures, but we are not an ESG focused investor, but of course we do ESG investors, because I think that this is quite similar to technology. Technology back in 2001 was something specific, and right now technology is kind of everywhere. You cannot imagine a business which has not a tech angle. So I think that with ESG is happening kind of the same.
Mm-hmm. And so I'd like to just ask you a quick follow-up question, going back to what Lucie had said earlier about, she felt from the beginning that it was very important that a company based on ESG be revenue generating and be a good solid business. So are you seeing that companies that have sustainability as part of their mission, is it reinforcing the idea that companies can do well by doing good?
Absolutely, but so the investment thesis that we had when we invested in Refurbed in the end was the same as we have in any other investment. So our investment criteria was the same, and basically can be summarized in 3 very basic things. Refurbed had and has a great founding team, combining different sets of skills, really strong founders, and with some of them combining or having the experience in the sector, having also the tech part with a very good CTO, and Peter also with a great experience. So that's the first, and that's a must for any investment that we do. Secondly, they had a great product, so we could see the product market fit, right? And third, they are in a huge and growing fast market, right? So that's the investment criteria that we were analyzing in the case of Refurbed, and that in the end we analyze in any investment that we do. But actually, as I was saying before, no, Refurbed is not an exception with our portfolio in terms of ESG investments, and clearly this has been growing within our portfolio. And just to give you a couple of numbers here, comparing our last fund, which is the fund that invested in Refurbed, and that was a fund raised at the end of 2018. So comparing this last fund with our former track record, the percentage of investment in ESG companies has grown from 18% to slightly over 50 in this last fund. But interestingly, if the fair value of these ESG investments represent 70%. So in terms of investment cost is approx 50%, but the fair value is 70% of these ESG investments. And actually, if we look at the multiple of the ESG investments is a bit over 2 times bigger than the multiple of the non-ESG investments.
That's
of course, all this is not explained by the ESG component. There are many other components, but in a nutshell, clearly the performance of the ESG investments is pretty good within our portfolio.
Okay, great. Thanks. So Lucie, let me turn to you. You know, who have you raised money from? And was it difficult at the beginning? Because I think there is this growing recognition now from investors that this is kind of the way to go. But when you started out, that might not have been the case.
No, for sure. And actually, that was one of our key considerations when we started, is we really wanted to stay away from VCs because we were worried they would kind of change our DNA or not respect our values or our ambition to truly change the world, whatever the EBITDA and the profit was at the start. So actually, for the first 4 years, we stayed away from venture capital. We had some great entrepreneurs who truly believed in our mission and became our business angels. And we had the opportunity to actually make revenue from day one as well, meaning it was actually when we had to be creative, obviously, and we couldn't pay ourselves from day one as co-founders. But we really made that conscious decision of not going for VCs too early, because we wanted to make sure that we could actually deliver on what we wanted to do. Today, the first time we raised from a VC, it's a B Corp certified VC, and it's really because we found Bliss, a venture capital that is truly aligned with our values, with our mission, who actually asked in the due diligence process, how do you ensure diversity in your top management, or how are you going to protect your mission long term? So after recently, we've seen more and more interest from VCs to actually do a full due diligence process and not only do a financial one, but really looking at what's our full impact on the world and in our society, and therefore we could trust them and we build a really strong partnership. For me, that's the future of the financial world, is really reinventing the KPIs of tomorrow to define what value is in a holistic view and not in a financial perspective. So that's where we are today.
Okay, thanks. Peter, let me turn to you now. And, let's talk about, because to have impact, obviously, you have to scale. So how do you balance growth with ensuring the quality of the products that are sold on your platform? Because you're dealing with third parties here. And then, so what kind of governance principles have you put in place?
Yeah, absolutely. It's extremely important for us, right? Because I fundamentally believe that every business is only successful if they manage to deliver customer happiness, right? So that's the most important thing for us, is to make our customers happy. So what we do there is we build a series of systems that align the incentives of our merchants, which mostly is making money with our incentive and our goal of making sure that our customers are happy. And so what we do there is we build a lot of technology that automatically checks the quality of the products, but not by physically touching the products, but actually by analyzing the kind of messages that our merchants get, by analyzing the reviews they get, by the refund statistics and the defect rates they have. And so we analyze all of that and we put it into algorithms that we have in the platform that actually promote merchants that have high quality versus actually ranks merchants with lower quality much lower, right? So basically, we automatically promote people with greater quality. And for that, we actually incentivize merchants to improve their quality, because if they sell products with bad quality, they're not making any money. And so for these systems, and we have like 3 or 4 of these, we actually make sure that we have found a very efficient way to quality control the products without actually physically touching them.
Super interesting. Thank you, Peter. So Lucie, still on this whole topic of scaling, you mentioned earlier, you have so many consumers who've signed up. What do you find to be the most challenging about getting the word out to stores and getting them into the system?
Yeah, so I would say, as a short answer, people are busy, right? So finding the right decision maker, getting them to understand what we do and just give us some bandwidth to actually join, it is the most difficult. And today we could gather 150,000 stores, so it's huge. But in a way, we're so supply constrained. When you look at like matching supply and demand, I mean, today close to 90% of our meals are being saved. So it's really about adding stores to keep on growing and to keep on saving more food. And for that, we need to reach out to the right decision maker. Once we have them, then it's fairly easy to sell, because you know, I mean, there is no cons on like saving your food, generating a new consumer flow, and showing that your brand is doing the right thing, sustainably speaking as well. So it's really a win-win-win for the stores, and it's also super simple to implement operationally in the stores. So that's why we could go so fast, but we're still being slowed down by just the attention span that a business owner today can give to a platform like ours.
Thanks. So Peter, do you find a difference in trying to scale in different European countries? And if so, you know, what are those differences and what do you find the most challenging?
Yeah, absolutely. I mean, in general, we have very universal products, right? An iPhone is the same in France, Germany, or Sweden. What we do see is that the consumer motives are very different. Especially in the Nordics and also in Germany and Austria, sustainability is very important for consumers, right? Consumers really care about sustainability, and it's a big anchoring point in our messaging. But what we see in other countries, for example, in Italy, this is a bit less important. But especially if you look at more Eastern European countries, we see that sustainability has not the same level of attention that it has, for example, in Central or Northern Europe. So we have to adjust our messaging a bit and also play with the USPs of the platform to attract different types of consumers in different markets. Okay,
thank you. So Lucie, you mentioned the idea, you know, this idea of you've got to get the mind share of the right people at the stores. What are some of the other key challenges in scaling your business?
Oh, do you have an hour? No, I would say it's many challenges, but I mean, it's part of the game, right? We, in Too Good To Go, we grew really fast in terms of number of people as well. Today, we have more than 1,200 employees across 17 markets. So, you know, when I still remember being like just a bunch of people just trying to do all the jobs and stuff, and then suddenly you have a team of experts who definitely know the job better than you do, and it's really about finding the right speed to grow this team, always taking care of your culture and of your DNA, and making sure that you keep repeating and repeating and repeating again what's your vision, what's your mission, what are your values, so that you can grow in the right way. And then it's also finding the right balance of how fast can you grow a team how heavy it is as well in terms of like budgets, because our workforce is expensive today when you think about paying the salaries every month. So it's it's really finding the balance, and also structuring the team and making sure that you have your strategy and you build the right structure to deliver on that strategy, but that you can also kind of adapt the structure to the talents you have in the company, because they want to grow as well, right? And they want a career and they want some growth paths. So it's really it's a constant refining of how do you make the most out of your current workforce, and how do you attract the right capabilities for building the future. Because every employee is at to go when they join, and a year later and 2 years later, their job is just so different because we're growing so fast. So that's really kind of what we need to, I think for me, the biggest challenge in building a company is making sure that the people and the mission are in a win-win context continuously.
Okay, thanks. So my next question is, well, let's start with you, Peter, and then I'll come back to you, Lucie. Are there specific things that policymakers and regulators could do to make your life easier? Peter, I'll start with you.
There are many things that they could do. Bureaucracy is unbelievable. Like in a country like Austria, where I actually thought before becoming an entrepreneur that doing business is actually easy. There are many small things that really take a lot of our time, right? But I actually don't want to talk about these small things. If we think about it in a bigger context, what we really see with the products that we're selling, that obviously sustainability is an important point for our customers, but price as well. And so I believe that price is the ultimate way to really motivate people to live more sustainably. And I believe that there has to be a different tax regime in place that massively incentivizes people through taxes or through cheaper prices or lower VAT on sustainable products. So what I mean with that specifically is that VAT for sustainable products has to be reduced massively, right? Because most products out there that are sustainable are more expensive than the conventional alternative. And as long as that is the case, people will not change that much, right? We will see a slow change, but what made us so successful is that we don't only have sustainable products, but they're also cheaper than new. And this combination is really drove our growth, because there is no downside for people. And that's ultimately one of the biggest barriers, I think, for sustainable consumption. If you look at it on a bigger scheme of things. And so this is what policymakers really have to do, make sustainability cheaper for everybody.
Okay, thank you. Lucie, what do you think?
Yeah, I mean, definitely aligned with Peter. There are many things they can do. I would say that for Too Good To Go specifically, I mean, the way we did it is never wait for them, because they are going so much slower than we can. In a way, they have so many stakeholders and they have their political system, which makes it so hard. So we run, and we never forget about them, right? It's really about getting the private and the public sector to work together. But for me, the private sector is the most efficient vehicle for driving impact. And therefore, it's really about doing it and then making sure that our ecosystem is aware, both charities and the public system. So for example, we've done a huge work on date labeling with our partners, with the biggest food industrials, with the biggest manufacturers, supermarkets, and we've aligned what date labeling should be tomorrow. And then we went to the ministry, both local, national, but also at a European level, and told them that's the work we've done. Those are the best practices we could implement. Can you make that the new regulation, the new norm, so that everybody does it? And that's where, for me, like, we can pilot many initiatives, prove the results, and then they are here to roll it out and make sure that the best practices become the norms. So that's, for me, that's the way we continue to work with them. And that's how we will help each other in the best way.
Thanks. We have a question from the audience I'd like to bring in. It's a follow-up question to you. And the person is asking, how do you design the architecture at Too Good To Go? Is there a side of the platform that you give more emphasis, and which tools do you use?
Yeah, so it's a great question actually, because historically, because we were so supply constrained, we've always put our effort in building a strong platform for stores, and we were always thinking about how can we design the simplest tool for them so that we can really provide them a solution for fighting food waste, and we know that the demand will follow. And we've really been in that reflection from the start. I would say since 2020 and since COVID, the world has changed a little bit. Consumers' habits and consumers' needs are much different than they were before. They are a lot more unpredictable. I don't know what other things of that, but for us, we really saw that it was a lot harder to predict our consumers' behaviors. So now we want to become a lot more consumer centric, and we're really building the apps a lot more, and our product in general around what consumers want. So I would say it's a constant. At the end of the day, you have to do both, but it's really about what's your bottleneck for growth and where do you focus based on that. So that's kind of like the strategy we use to design our platform.
Thanks. So Peter, let me turn to you then about the evolution of your platform. You mentioned briefly early on that, you know, you want to expand from electronics into clothing, maybe even furniture. I mean, what is the vision? Do you want to become the eBay of, like, you know, refurbished everything? What's the vision, and what do you see as the challenges of, you know, moving into new verticals?
Yeah, absolutely. So the way we think about it is that we're very close to our customers, right? And we try to engage with customers as much as possible. And so when we talk to them, what they basically say is they would like to buy more sustainable products, but it's actually really hard to, first of all, get them in a meaningful way. And the second one is to understand whether or not the product is actually sustainable or if it's just another form of greenwashing, right? It's very complicated for consumers to really understand which product is really sustainable and which one is actually being greenwashed. And right now, every single company on earth is suddenly sustainable. So it's becoming even more difficult for people to understand. And so what we're doing is we want to be the gatekeeper of sustainability. So it means all the products that we sell on our platform are truly sustainable, or at least are the most sustainable option that is on the market. And with that promise, we're solving that issue for a lot of consumers, right? Ultimately, we believe in e-commerce and in convenience of that. So we actually don't want to build the eBay because I think there are a lot of flaws in the platform. What we want to rebuild is the green version of Amazon, or the Amazon for sustainability, because we believe in the convenience of Amazon. I think they're doing a great job. I think they're, you know, not great from it for a number of reasons. If you look at the impact that the company has, but from the business model and the convenience aspect, I think they did a lot of things right. And so we want to recreate that for sustainability.
How would you go about, let's just take something like furniture, right? Like you would have to connect with, I guess, artisans, people who, you know, take pride in, you know, redoing furniture and giving them a new life, right? How do you connect into those communities? And same question as with the electronics, how do you, you know, guarantee the quality?
Yeah, exactly. So what we have to do as a platform is that we have to connect to the right people, right? We have to find the right furniture refurbishers or the producers of sustainable furniture and get them on the platform. The good thing is that this is what we've been doing over the last few years within electronics, and these conversations with these brands or these companies are fairly similar across categories, right? So there's not a big difference. What is great about this is that we already have the technology to connect to them, to the ERP systems, etc. We have the technology to run ads for these categories. There's a lot of things to be built that we can actually use across different categories. And on top of that, we have a customer base that really likes to buy these products from us. But of course, is the case that the customer journey is very different from buying a smartphone to buying a couch, right? So this is very different. But this is something that we're rebuilding right now, where we get a lot of experts actually from these industries, because this knowledge is not something that we have to reinvent, right? We don't have to reinvent the wheel, but there are a lot of people that know how to sell these, and they're more than happy to work with us, because we, with our mission and the impact as a business, are very attractive for a lot of talents that want to do their part in saving the world. And that's why it's actually very easy for us to get the best people on board. And with the best people, we can solve any challenge.
Thank you. Marty, let me turn to you and say, as an investor, what do you see as, the new opportunities that the circular economy can open up?
So so we are actually investors in other circular economy startups. For instance, we are investors in GoTrendier, which is a second-hand marketplace for fashion, especially for women, operating in Mexico and Colombia. So it's a similar model to Vinted and Europe, no, or Poshmark in the US. So very interesting model, growing rapidly and in a healthy way. So I would say that one of the things that we are seeing is that the market it's true what Peter was saying before about the difference, no, in between the different European countries, but we see a general trend on towards the circular economy and a general acceptance of the second-hand products, right? Whether refurbished or not refurbished. Then we have been also investors in Wallapop, which is another leading peer-to-peer second-hand marketplace in Spain, where it's extremely successful and they have actually volumes of transactions absolutely comparable to the biggest traditional retailers. And now they are growing towards Italy and Portugal. So again, the same model, peer-to-peer of a circular economy, right? In that case, it's not like GoTrendier or Refurbed, which are in a particular vertical, but it's an horizontal marketplace. And then another sector where we have had where we have invested in the case of cars, no? Which I would say it's probably the first circular good, no, that we are used to buy and sell secondhand, right? So in that case, we invested in an Italian company, which is Brum Brum, which has a very similar model as Refurbed, but with cars. So they buy cars in bulk, and they, in that case, they do the refurbishment by themselves within their own factory. And they were actually recently bought by Cazoo, which is the leading player at European level, which is a company based in the UK, and it's in the process of doing a build-up of these kind of players. So just to mention 3 different examples of circular economy within different verticals, and in one case, I would say it's a managed marketplace, no, in the sense that they go through a refurbishment process similar to what Refurbed does. And in other cases, it's something which is probably more similar to what eBay has been doing for years, but still there's huge demand on this, and there's still opportunity of going into some specific verticals. No? And that's only what relates to circular economy. But then, so besides this, on ESG investments, we can find other verticals related to, I don't know, logistics, which I think that it's also a big challenge for all these actually circular marketplaces and any other e-commerce. We are looking at opportunities in the water savings for agriculture. Also in terms of e-signature solutions, no, it's another way also of having a sustainability impact. So there are many other, of course, sustainability angles that we are seeing, that we have invested in the past, and that we'll keep investing in the future for sure.
Thank you. Do the panelists see, it seems to me there's an opportunity to recycle so much more. Like, let's just take home appliances. People get rid of their washing machines or whatever, and that may not, that could still be used by someone else, especially if they were refurbished. Do you believe that traditional players like, I don't know, Darty in France or others will start to get into this, the platform business of recycling things? Or do you think that it's going to be newer players like you who will really run away with the market?
I mean, if I can start by answering, I would say both, definitely. I think they have to. They can't just not do it. I think it's the movement is growing too fast. It's still quite lightweighted, if we can call it like that, but it's moving fast. And I mean, I've talked previously about the benefits of Too Good To Go, but you can do that with any circular economy, right? It's good for the environment, it's good for just making sense, and it's also good for profit. So there is no way they continue operating with throwing away that much, because it just doesn't make sense. So they have to move this way. At the same time, there are, of course, newer players and newborn who just create themselves around that DNA and have it so central that we can actually go much faster. For us at Too Good To Go, it's just easier to do the right thing, because we were born like that. Whereas when you have to completely shift the way you usually operate, of course, it takes time, it takes effort. I have tons of respect for the huge corporation that try and do it. But of course, it's going to take years, but they have to. Otherwise, they won't be here in 20 years anymore.
So Peter, let me ask you, what do you think traditional companies could learn from companies like Refurbed or Too Good To Go, and in terms of operating these kind of platforms?
I mean, the businesses, I think, are fundamentally different. So many things that are different and that we can learn from them, but they also can learn from us. I think one thing that sets us apart as a platform is the speed that we operate in, but also the way we do business, right? We really focus on our core competence, which is building the platform. And for example, letting the refurbishment be done by our merchants, right? Mm-hmm. And so we really believe in partnerships and bringing the strength of each partner to the table and create something bigger than we could do on our own, right? And if we talk about companies like Darty, etc., these big electronics retailers, I think that's something that we can actually teach them a bit.
Great, perfect. So with 1 minute to go, I'm going to ask each of you to complete the following sentence. For you, the future of sustainable platforms is, Marty, you want to start?
For me, it's about traceability of the items sold, which brings to credibility.
Okay. Lucie?
It's about refining the way we measure performance and really having new KPIs to define what a good platform is. And those need to be linked with our environmental and social impact.
Thanks. Peter, you get the last word.
Yeah, for me, it's really about building a holistic product offering for consumers that is not just about sustainability. Of course, sustainability has to be the foundation, but it has to be all the other elements of the expectation of the customer met, right? Which means price, which means quality, which means convenience. And if you as a business can bring value to all of these, then you have a very bright future.
Thank you. And with that, I'd like to thank all of our panelists for inspiring us, enlightening us,